Economist, analyst Kelvin Chisanga says Zambia's decision to maintain annual inflation at 6.5% in July 2026 demonstrates that the country's macroeconomic stabilization efforts continue to deliver positive results. Mr. Chisanga said the latest inflation rate, which remained unchanged from June, marks a significant improvement from 13.0% recorded in July 2025, representing a 50% reduction over the past year, while remaining within the Bank of Zambia's 6 to 8% policy target range. He attributed a decline in food inflation from 6.7% in June to 6.4% in July to improved agricultural production and increased food supplies across the country. However, Mr. Tsanga noted that non-food inflation rose from 6.0% to 6.7%, reflecting continued cost pressures in areas such as energy, transport, and imported goods. He further said Zambia's broader economic fundamentals continue to improve, pointing to 7.7% gross domestic product (GDP) growth in the first quarter of 2026, international reserves of $6.5 billion, and a relatively stable exchange rate of about 18.3 kwacha to the United States dollar.
Zambia's inflation is still holding steadily. Obviously, looking at the number of different combinations in terms of how certain things are working out. So the latest inflation figures provides an important economic signal. Of course, understanding that there has been a moderation which we have seen, taking place. Obviously, this also keeps to say that inflation is holding firmly within the Bank of Zambia target range of 6 to 8%. So the bigger story in the process here is that the progress made over the past year, reflecting of about 50% reduction as compared to what we have also been able to see in the previous years. This testifies to say that inflation has delivered a stability dividend, which creates what the economy calls as a stability dividend for the economy. And obviously for the household, this means that slower increments in most of the cost of living items, particularly with food inflation easing, supported by a strong improved agriculture production as well as food supply availability. For the business sense, this stability in inflation improves planning modalities, reduces the aspect of uncertainty, and support investment decision patterns. Investors also take very keen interest into this in terms of trying to see that confidence is more predictable in the economic environment, especially when we combined with the current or the recent atmosphere of recording 7.7% of the growth in the first quarter of this year. And this compounded to the case of having stronger reserves of slightly above 6.